Let's get across the market open now. Mark Gardner joining us from MPC Markets. So, Mark, obviously the focus is on the reaction to the US strikes on Iran. Oil is going to be key.
Yeah, oil and Brent are up 1.5 to 3%. They basically just opened around about 8 o'clock here and in Sydney time. Gold was up around 1% as well. You're seeing equity futures down. Well, they were initially down about 1.5%, but probably only down about 0.8% now. There's been obviously Trump's. They've gone in on I think it was Saturday evening, late evening. And supposedly taken out the nuclear facilities. The Iranians have said that they've moved moved everything prior to the attacks coming. Look, who knows? It just obviously there's probably a little bit of propaganda on both sides. And Trump has since said he wants to move immediately to peace talks. Russia and China, backed by Pakistan, have submitted a request for ceasefire and unlawful attack on Iran against the US, but it can be vetoed by any of the top 9 nations, which the US will obviously do. So a bit of a toothless tiger, the UN, but I think what it really shows is that, you know, even if you're on different sides of the conflict, everyone doesn't want oil prices up, which is essentially what this is largely about. The Strait of Hormuz has been closed. They do have a proxy via the Houthis to not necessarily close the Red Sea, but make it very dangerous. And obviously, you've got quite a lot of oil goes through the Suez Canal into the Red Sea. So, but we're talking about 20% of the global oil supply, crude supply, and we're talking nearly 25% of LNG supplies as well. So,
and bearing in mind, I mean, that would hurt Iran at the same time, wouldn't it? Given that's how they export their own.
Absolutely, it would hurt Iran, but they've been known to cut off their nose to spite their face. So, and particularly, the fairly biblical comments coming back and forth from Prime Minister Netanyahu and the Supreme Commander or Supreme Leader in Iran. So. No one, there's a lot of pride involved in this, and it's been going on for thousands of years. So I don't expect them to necessarily back down. They have said that they would, any target now that is US based is a legitimate target for Iran to attack. So yeah, obviously, but I think markets will be on a knife's edge if Iran retaliates and hits an embassy or a US interest. I think that this thing will escalate further, but I'm not entirely sure that they'd be silly enough to do that.
So, Mark, I mean, clearly commodities in focus, given they are going to react. But what are we seeing with equities at the moment? Because investors, while MAP's sort of sitting on their hands, hasn't been a dramatic reaction to what's unfolded, is there?
There hasn't been a dramatic reaction. I think the equity market seems to be the outlier compared to interest rates, compared to the bond market, compared to commodities, etc. I think. We shouldn't really be up here. Traditionally, we would have seen a fairly significant fall down. I mean, this rally in oil now is about 18% in the last month. That equates to about 0.3% in headline inflation, and even worse at the producer prices end as well. So more like 0.5, 0.6. So essentially, we've got a situation where Trump's obviously got tariff inflation. Now he's gone and caused energy inflation, which was a key part of being able to accept the tariff inflation, was having lower energy prices. And he needs rates down. Yep. And they're not going to bring rates down if inflation starts going back up again. So,
well, despite badgering the Fed chief. In fact, Mark, I mean, there are a number of issues in play at the moment dependent on Donald Trump's decision making. In fact, you've illustrated this.
Yeah, no, there's a lot of big decisions coming, and this just really illustrates the fact that they really haven't. Nothing's really been resolved. So I mean, we've got obviously the Iran decision was made over the weekend, and we've still got the big beautiful bill has to be done by the 4th of July. I think by the 9th of July, the tariffs can obviously also come back in. And then you've got debt ceiling, or the government funding program in the late in September as well. So there's all of these very important decisions coming up. They're all not necessarily decided, and also Russia, Ukraine as well. Supposedly the movement of troops and aircraft from the US to be involved in the Middle East conflict has meant that Russia's also, taken some ground, and they've got less cover in Ukraine as well. So there is a lot going on. There was chatter about Taiwan and China, etc., but I dare say, on top of oil prices being higher, I don't think the world needs any more geopolitical issues, and that one tends to come up a lot. But the big key thing with that Taiwan, a Taiwan Strait blockade is it only takes 7 days for them to run out of energy. They're not energy independent, and they only have 7 days of stockpiled inventory of energy. So that one, China can start pressing, geopolitically as well if they would like to.
Oh goodness! Well, everyone has their eyes off the ball there. It'd be amazing to see if China actually makes a move. But Mark, I don't know if you saw also yesterday, FOMC member Christopher Wallace saying that the Fed could cut next month.
Yeah, judging by the dot plots, etc., and what Fed Powell said, the chair, I don't think that's necessarily a possibility. But look, anything's on the table, I guess. We've got a lot of Fed speakers this week. We've got PCE on Friday in the US as well, which obviously is a very key inflation number, the one that the Fed watches very closely. We've got Australian CPI this Wednesday. I think now we're out of that blackout period. I think we've got about 6 or 7 Fed speakers this week, and Powell testifies to the Senate and the House committees on Wednesday and Thursday as well. So I think we'll probably get a clearer picture as that comes up. But Waller is a known dove as well, so you would expect those sorts of comments out of him.
And look, locally, any sort of corporate action you're expecting?
Not overly. I think we'll obviously have a bid in the energy sector. I don't think I'd be buying it up here. I think a quick resolution sees oil head lower almost immediately, and LNGs. So I think if you're not on that trade, it's very dangerous buying it up here. And we did see a bit of selling in the gold miners last week. It sort of started Friday a week ago. It'll be interesting to see if what they do today, because there hasn't been particularly positive price action in those guys.